Hello, everyone, and welcome into crushthestreet.com. I am Kenneth Amaduri, and I'm joined today with returning guest, someone who's really given us a lot of insight on the markets, how the markets trade, why the markets trade, and a perspective on kind of what to expect going forward here as, you know, the completely nuanced and multifaceted world continues to bombard us. And we attempt to make money in this ever-changing world. Without any further ado, Charles Nenner is on the line. He's the founder of charlesnenner.com, Charles Nenner Research Center, independent market analysis, and again, someone who's a real fact finder in our community. So I appreciate him a lot. Charles, thanks for coming on Crush the Street with me today.
Well, nice to be back.
Well, I'd like to start off with the markets. We're 10 years into this bull market with stocks. Lots have been going on. One thing you've pointed out in the past is really the news is not what drives the markets. And, you know, I'd like to get your thoughts on that, you know, kind of where we're at and what we're dealing with. I mean, obviously, after the 2016 election, we saw stocks really go into hyperdrive, and many would, give Donald Trump the credit for that. Optimism, call it what you may, maybe a business-friendly environment here in the U.S., or maybe it's just the Federal Reserve and endless QE and pumping the system up with loose monetary policy. So I said a lot there. I'd like to give you the floor and just give you an opportunity to respond with what we're seeing in the markets currently.
Well, as you know, my idea is that markets are mostly predictable, has nothing to do with the news. It's the other way around. The markets cause news to happen. And actually the high until now we saw in the beginning of 2018 when we totally went out of the market. Now, to give you an idea, a simple idea, one of the reasons was the following. Every time a year ends with a 7, you end a bull move. So that's why at the end of 2017, beginning of 2018, we sold. That's only one reason. And if you go back 10 years, then you had the high in 2007, leading in 2008, 9, the big catastrophe. And if you go back, you got 97, 98, which was the Asia crisis. And before that, 87, everybody remembers the crash from 87. And so if you look back, it's every time a year ends with a 7, it's the end of a bull move, and it's time to sell. Now, the problem is a lot of people, if they don't understand why things happen, they don't want to use it. Me, being educated as a medical doctor in a previous life, if they told me a red pill is going to save a person's life, even if I don't know how the red pill works, I use it. So I don't have problems using all these signals. And if you start following it, then it becomes very simple to predict market movements based on all kinds of cycle work and programs that I wrote. And the other thing is that if a market goes up or down, or a stock goes up and down, it goes up to a certain level that's not at random or it depends on the news. That can be calculated, taking the first momentum move, and then you know how long it stays up and how far it will go. So that's how we approach markets. Now, this move that we started in 2009, by the way, we got in the low of February, March 2009, can maybe test the high one more time. Everybody thinks that September, October is going to be the dangerous period. I think it's going to be already in July. The whole question is, do we see one more small bounce up that we want to sell again for those who didn't sell? Or it's going to break down here. Based on the cycles, I think we have one more small move up. And then we get to the important market situations in the stocks. The bonds continue to trade up into also the summer, and then they make it interesting, very interesting top. And the same thing for gold. Gold is going nowhere, but after the summer should start a very interesting bull move that could bring it up to 2,500.
Charles, very interesting, especially how you pointed out years that end with 7, end of bull markets. But I'd like to ask you then, and just maybe give us more perspective on the markets not trading on news. if you're watching CNBC or investing.com or some of these news websites, financial news, you'll read trade wars trigger a major sell-off in stocks. I mean, it was a couple of weeks ago, there was, $1.5 trillion of stock market value that was lost, and everyone was attributing it to Donald Trump's tweet, right? It was like some crazy, $1 billion a word or something like that, some crazy number that someone calculated. So to that degree, why isn't the news responsible for some of the market moves if you have some of these direct correlations happening?
Well, first of all, there's doubt about correlations. And then what's the chicken and what's the egg? I don't know if you get our research, but our cycle top was the 6th of May. And it was exactly that day or the day after that this whole mess started. Now, that 6th of May, we already talked about 4 months before. So we went long the VIX, and we said you have to be long the VIX by the 5th or 6th of May, because then we're going to have some weakness in the stock market. Now, the question is there any correlation? There could be, there could not be. I really don't know. I don't think so. Or what you could say is the fact that cycles turn down, and that brings negativity, which will lead to market weakness, will lead to the same negativity in the negotiation between China and the United States. So these cycles that are negative are not only projecting the stock market. There are nature catastrophes and whatever happens in those time periods that are not good. Now, to give you an example, let's say you own IBM, and IBM is up 50%, and you own it for a year, and IBM comes out with a great number. The results were great. Now, does IBM go up or down? Well, here comes the correlation with the cycles. If the cycles are up, then IBM goes up, and the Wall Street Journal will say, investors poured into IBM because they're doing great. If the cycle is down, IBM has to go down, and the Wall Street Journal will write, IBM had great numbers. Investors don't think they do better than that, so they took profit. So on both situations, you have correlation. Only the cycle that's up and down will predict if the stock goes up and down. So the correlation seems to be, if you pay attention, the media don't say the market sold off because they say the market sold off as Trump tweeted. The word as doesn't really mean because of, because they're afraid to say that. So it's in people's mind to think if there's a correlation or not. But if you invest like that, you never know what can happen the next day or the next week. So that's not a way of clever making money.
So Charles, you've made some very precise predictions as to how far the markets will correct and how severe this might be. And I'd like to touch on that a little bit if you're okay with that, and kind of give people an idea of what sort of top and what sort of bear market they can expect with stocks as 2019 continues and we go into 2020.
I think it's going to be a serious bear market. And now, if I look at my cycles that predict inflation, then the cycles show there's going to be deflation and the GDP is going to be very weak. It sounds strange because at the moment the GDP is doing great, but we can also understand that because if the inflation hardly reached 2%, and let's say in Europe it's 1.3, 1.4%, once the economy turns down, then of course you go below zero and you have a deflationary period. Now, most people who are not the historians of markets don't even remember what deflation does, but that kills every asset that there is. And the GDP usually comes from 5-6% before turning down, and now it comes from maybe 2-2.5. So also that one goes below zero, and then this world is going to be in big trouble.
So I'd like to get your thoughts on what we're seeing in the crypto market. Right now, we're seeing some serious optimism. While we're doing this interview, Bitcoin is at $9,000 US. And that's something, this has been an asset class that has been very good to us here at Crush the Street. We've made a ton of money in the crypto space. But with your cycle work, with your analysis, I just would be interested in your opinion on what's going on with cryptocurrencies, Bitcoin, and where you see it going in the future here.
Well, Bitcoin there's an example that there's no fundamental analysis on Bitcoin. So it's all price targets and cycles. So a price target is just above 10,000, and the cycle that moved this thing up is up till the middle of June. So there's another 1,000, maybe 1,500 points to go, and we have another 2 weeks. Then the cycle tops, and we could see weakness again. If you do an overlay of the gold market from 1980, and you overlay the Bitcoin, you see that on a smaller scale, it does exactly the same thing, because the psychology market is always the same. So it could be a false move, like it made in gold, and go down again. But again, the target is 10,000, I think. Well, I don't know by heart, 10,000, 100, 10,200 or so. And cycles really hit the bottom on this Bitcoin, the work that we did, and they topped the second week of June.
Wow. We'll definitely be looking out for that second week of June. So that's incredibly interesting. And what is your longer term opinion on crypto and Bitcoin? You mentioned it doesn't have much fundamentals. I mean, is it possible that we go to 20,000 and, seeing it come back to 9,000? I mean, people are wondering if it's going to go to 50 and 100,000 now, because we've seen some, exponential, extraordinary moves. It's not beyond conception to see that happen based on, the fact that it was $100 and no one thought it would go to 1,000, 10,000, and even $20,000, right?
Right. So here is the problem. I work with, let's say, daily, weekly, monthly, and yearly cycles. And for a longer term forecast, I need more data. So this Bitcoin, for instance, doesn't trade that long. So I cannot make longer term cycles. So I cannot do a longer term forecast.
Understood. So you mentioned already gold, and we have a lot of people who are very much interested in gold. They too understand that the markets are getting toppy and problematic, and we feel that there is going to be a transfer into precious metals on a more fundamental perspective, not really looking at cycles, just for the fact that it's gone really extended on one side of the market, and gold hasn't moved. It's not that deep, it's just we're expecting gold to have a move after not having a move for quite a long time. There's been endless money printing, and gold needs to have its time. So what are your thoughts on gold? And you mentioned some price targets. I'm interested in, if you can expand on that a little more and just remind everybody what you said.
Well, first of all, I want to mention, because people might make a mistake, that all the pundits will say gold is going up in an inflationary period. But most of the bull markets in gold was in deflationary period, because if you have deflation and say the products that companies are making is going down in price, and money will be hard to get, and the housing price go down, people will run into gold. So that's one of the reasons why in deflationary periods they have a good gold price. Now, we work with momentum studies. That means we know every time there is a big up move in gold and then there's a correction, from that low you can calculate how high it will go up to the next high. And if we take the last high from 1900 where we sold gold, then you come up to 2,500. That's the next upside price target.
Charles, I'd like to kind of get your thoughts here as we just wrap up this interview. Just in general, how should people be approaching the markets in 2019? And, also come from the perspective of somebody who's saved their money for 40 years. Not just a move like, hey, what do I do with my next paycheck? But what do I do with this money that I've saved and worked for 40 years? How do I retain that? How do I keep it and make sure that I don't, lose a lifetime of savings as we enter the next, 2 to 5 year period?
Well, first of all, don't believe the story that the banks are better financed than before. You really have to study in which bank you want to keep your money. And since I think in the United States they're covered for $100,000, maybe open different accounts, one on your name, one on your wife's name, one on two names, one of your son's name, So you're covered for a couple of times $100,000. And just, I don't want to be too negative, but in the depression of the 30s, people had treasury bills, but once they expired, they didn't get the money back. It took them years to get the money back. So it's very difficult to be safe with your money. But what you have to do is you have a chance, because this bull market is going to be over soon. And then if the thing comes down, then try. The best is if you look at our research, which, by the way, you get a couple of weeks for free. So especially in this period, it's very helpful to look at it. But then try not to be fearful. And when everybody's fearful, then put your money into stocks for the next up move. And the other thing is, I don't know how sophisticated you are, but if you want to buy some gold stocks and they give a nice dividend, I think around 3%, and even if you sell a covered call against it and gold goes up, then you may make a very nice rate of return. So soon the place you want to be is in the metals, and stay out of the stock market, and don't be afraid once it comes tumbling down. And when everybody's in a crisis, then you put your money to work.
Well, I'm not very sophisticated. I like to buy low, sell high. That has worked well for me in the past, and capture equity. That's my goal with what we do here. Charles, thanks so much for coming on Crush the Street. If people want to learn more about the things you do and the research and the work that you put out, let them know about your website and what they can expect to find.
Yeah, you can go to charlesnenner.com, Charles Nenner, Nenner.com, and you can sign in, and nobody will charge you in the beginning, and you can get an idea what is possible in market forecasting. I mean, we'll show you things that you didn't even know that were possible. So at least you have an idea of what is out there for the big players and the big hedge funds, what they look at, and they really don't listen to the stories of the day.
All right, sir. Well, thank you so much for coming on the show and taking some time with us.